What is up, people? What is up? It's your boy James Lee here, back again with another video. This video is going to be super interesting just because we have a Wyckoff video. Now, I know a lot of smart money traders have heard the term Wyckoff, or if you haven't, Wyckoff is basically a technical way of a technical look at the market, right? You know, some people, let's say, compared to other retail traders, they would see what they would be considered as some kind of manipulation in the market. What they see as manipulation, we see as Wyckoff. So it's to an advantage for us just because, you know, when we see this quote unquote manipulation happening, we know that there's something that's going on, a potential reversal or a potential continuation of the current trend within the market. So we know that when there's some kind of manipulation in the market, we know that that's our time to be paying attention more so with the market. While others are straying away from the market, we know that it's our time to potentially look for a move within the market. So what exactly do I mean by that? If we look at this, or if we go to the website over here and I'll shout out to Richard D. Wyckoff, who was the inventor of this this way of approaching the markets. Here's what I really want to talk about when it comes to Wyckoff. Wyckoff is basically a way of, as I said before, a way of looking at the markets. While other people would see manipulation within the market, we would see Wyckoff, right? And that's a good confirmation for us. That's a good confluence for us to enter a trade, Wyckoff. Now, I want you guys to understand that Wyckoff is very fractal. Now, what that means is that Wyckoff can happen on a lower time frame or it can happen on a higher time frame. Just as I told you guys in my market structure video, we can see breaks of structures happening on a higher time frame, break of structure right here, a break of structure right here. Just as we can see a break of structure on a higher time frame, if we go down to a 1 minute, we will see a break of structures happening on a lower time frame. Break of structure, we got a break of this low right here, break of this low right here, break of this high right here. See, this is what I'm trying to explain to you guys, the fractal nature of the market. Whatever happens on a higher time frame is going to happen on a lower time frame. So just as structure can be broken on a lower and higher time frame, Wyckoff can happen on a lower or higher time frame as well. And that's what I mean when I'm talking about when I say the market is fractal. Whatever happens on the higher time frame happens on a lower time frame. Now, let's get into the two main phases of Wyckoff. The two main phases of Wyckoff are accumulation, as you can see right here, accumulation. And I'm going to link this website down in the description. So if you want to check it out, it's really useful. This is really helpful, especially if you're looking to get into Wyckoff and looking to better your trading. So as I was saying before, two main phases of Wyckoff. We have accumulation and distribution. Now, before I get into the technical aspects of these phases, before I dive deep into how these phases occur, what happens within these phases, I want you to know that these things, again, as I mentioned before, this is nothing but manipulation happening in the market. And what exactly is manipulation? Manipulation is basically the banks trying to liquidate people out of their positions, trying to close out people's positions or trying to stop people out while they make money on their end. So as you can see, let's see, well, let me get rid of this. We can see right here, the market has manipulated in this area right here, as you can see, because we see breaks of structures to the upside, breaks of structures to the downside. It looks like the market is consolidating, but what's really happening is there's Wyckoff inside of this area right here. There's Wyckoff happening inside of this area. And now if we can position ourselves to an advantage, then we're able to capitalize on Wyckoff happening. Again, while other people see manipulation, we see Wyckoff. And that is a good confluence for us to look for if we're trying to enter into a trade. Now, again, as I mentioned before, Wyckoff is nothing but constant liquidation and mitigation within the market. What do I mean by liquidation and mitigation within the market? As you can see here, if we zoom in a little bit, let's go to 5 minute actually. Well, it doesn't matter. It happens on, let's see right here. As we can see right here, we see there's something going on within this area right here, right? Something going on within this area. Now, again, we see the market in a different way. We're not afraid of manipulation happening because we know if we can position ourselves, as I said before, if we can position ourselves correctly, we can take advantage of the moves that happen right here within this quote unquote manipulation. And we can be part of it and we can continue to ride the wave to profits, right? So again, here we go. We see a downtrend, right? Downtrend. And what happens? We get a break of structure of this downtrend. So, as I mentioned before, mitigations and liquidations. We have broken to the upside, and we need to mitigate this position right here, right? This order block. Again, if you haven't watched my last video, be sure to watch it. We need to mitigate this order block because the banks have sold into it to buy the market. So we've liquidated people out of the market. So we've got these people right here thinking that we're going to sell. We have these sellers right here, this trend line right here. People thinking we're going to sell. What happens? We buy up to liquidate these people out of their positions, these sellers out of their positions, and we continue up. Now, what can we expect? Based on my last video, we can expect a mitigation of this area and or order block, supply demand zone, whatever you want to call it. We can expect a mitigation of this demand zone in this case. So what happens? The market buys up, comes back to mitigate these orders, and continues to buy up, right? If you didn't get on that one, you got a second chance, and then the market continues to the upside. So again, Wyckoff is nothing but liquidations, constant liquidations and mitigations within the market. And in this specific area right here, if we go down to an even lower time frame, we can see that there's Wyckoff within this small area right here. Because in order to buy, the market had to manipulate people out of their positions in order to grab their money and continue the market, continue the flow of the market, the natural flow of the market, right? And if we actually look at the market from a higher time frame, we can see that the market is just one big manipulation. So does that mean we should stay out of the market just because it's constantly manipulating? Absolutely not. We want to get in and position ourselves in the correct place so that we can take advantage of the manipulation that's happening, right? Because again, if you look at this, it's a huge manipulation. But if you can get in at the right moments, you can capitalize and catch these nice moves within the market. That's what I'm trying to explain to you guys. All right. So again, if you haven't watched my liquidation video, my liquidity video, be sure to watch that because there's liquidity in all forms. Liquidity comes in all shapes and sizes. As you can see right here, we have buy side trend line liquidity forming. We got these people buying this trend line. What happens? They get stopped out of their positions. Banks make their money and they continue in the direction that people anticipated, you know? So again, now let's look at a live market. I have something marked up for you guys that I want to show you. It's very important that I show you guys this. That is not what I meant to press. So let's go. Over here. I think it's on 1 hour. I had it. All right, perfect. So let's first take a look at accumulation. Let's go back to the website we had before. Accumulation. As you can see, accumulation is the market manipulating in a certain area to continue a buy to the upside, to continue to the upside. So it's the market going from something like this, from a downtrend, and the market will accumulate, again, liquidate, mitigate. That's all Wyckoff is. Mitigate areas or OBs to continue to the upside, or excuse me, to reverse and go to the upside. I want to stick to accumulation for now. All right, we're going to talk about distribution next. But accumulation is nothing but manipulation from a downtrend to reverse the market to continue, potentially continue up, right? Again, we don't control the markets. We're just reacting to it. Whatever we see, we react to what we see. We trade what we see, not what we believe. Let me get rid of this, and let's go back to the website that I was on. Keep this right here. All right, so again, there are different phases of accumulation and distribution, but I don't like to worry too much about the phases. But what I do want to concentrate on is these specific points, these specific, I guess you can say, entities, right? You got the PS, AR, ST, SC, and it actually explains what all of these are over here. Preliminary support, selling climax. Now let me show you something. Here's what we have. Can I actually, let me actually screenshot this. No, I can't. I wish I could copy and paste it. But again, here's what we're looking at. Again, where are we coming from? We are coming from a downtrend, and then we're expecting the market to reverse from this accumulation. So let's zoom in on here. So what is the first part of accumulation? We have this preliminary support. Preliminary support. If you want, you can read what it says. Preliminary support, it's nothing but, false support that the market gives to entice buyers in the market. So again, you've got people that mark up their zones. Some like to mark up their zones as support/resistance. They will consider this support, and what happens? They will try buy. Eventually, they get liquidated out of their positions, right? So that's all preliminary support is. Selling climax, you can see right here. And from the selling climax, what do we see? An automatic rally. So we see a structure point, a structure high made from that selling climax. So where's the structure high made from the selling climax? Right over here, because we have the selling climax. The structure high made from it is within this circle right here. So this is our automatic rally. ST, they consider it to be a, as you can see right here, secondary test, in which it tests the selling climax. So this is nothing but a test, or, as I explained before, mitigation of this last down candle. See how perfect that tapped in? It's just mitigating this last down candle to continue buying, as you can see here, right? So we've sold to buy, and now we need to mitigate this area to continue in the direction. Came down, mitigated, and continued in that exact direction. So we have this ST, and then we have breaks of structure happening. We've got people anticipating buys. You could have caught this. This would have been a nice buy right here, actually, if you would have caught this. But let's focus on the point here, the main idea. So we have a break of structure to the upside. But what happens? We've got another false area of support. False area of support. And then what happens? They get liquidated out of their positions. And not only do these people get liquidated, but the people holding from this buy, if you didn't take your profits, got liquidated as well, and out of here. So this is liquidating this short-term liquidity right here, as you can see, right? People buying trend line, it buys up, got the false sense of support, it liquidates them out, and liquidates these people out as well. And what happens after that? We continue in the direction. Break a structure. We come back down here to, again, what? Mitigate. Buy, mitigate, continue in the direction. So that is our STB, or it's actually a secondary test, but in phase B. So I just call it STB just to keep it simple. And then after the STB, we see the STB get liquidated, and it creates the spring right here. In this case, there is no spring. There's not always going to be a spring. This is going to be regarded as accumulation schematic number 2, where there's no spring. There's only the STB right here and a continuation and mitigation up, right? So we want to look at the accumulation number 2, STB. What happens after STB? We get this last point of support. What happens after STB? We buy up, we create liquidity, right? Constant liquidation and mitigation, as I told you guys. Constant liquidation and mitigation. Actually, liquidity low is what I meant to put. Constant liquidation and manipulation. Liquidated these buyers out of the market. What happens? Mitigates and or tests the STB. So it's mitigating this last down move, right? Again, as I told you, constant liquidation and mitigation. That's all Wyckoff is. So when people see that Wyckoff is manipulating, if we can position ourselves, as I've said, 500 times in this video already, we can catch the correct moves all the way up and profit off them, right? So again, after the STB, we see a buy up, and if you see some kind of liquidity, I would advise you not to get into the market. So if we're right here and you see this liquidity happening, it will be best that you don't get into the market, because we can see that this is some kind of liquidity in the market forming. And then we see the market buys up a little bit and then buys up, liquidates them out. Excuse me, it buys up a little bit right here and then liquidates them out. Let me actually close this out, replay mode. Let's go back to here. So again, and as you can see right here, what happens? We see more liquidity, sell-side liquidity, sell-side trendline liquidity, right? Again, liquidity, 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 because money is what moves the market. Wherever the money is, that's where the market is moving. So we see this trendline liquidity right here happening, right? Trendline liquidity, what happens? While they're mitigating this STB, at the same time, they push up and they liquidate these sellers out of the market. Now they're gone and we've taken our profits already, right? And you've probably heard the saying that where people get stopped out, we take profits. We take profits where they get stopped out. If you haven't heard that saying, it's true. Where they get stopped out, we take our profits. And that's the case right here. They're selling into what we're buying into. And what happens? We take profits. All right, so that's accumulation. And these parts of accumulation aren't really necessary. They're just, again, mitigations of these demand zones and or OBs, if you want to call them, whatever you want to call them. They're just mitigations of those areas. Let me clean this up a little bit because it looks a little rusty. Control that. Again, accumulation and distribution, or Wyckoff in general, is nothing but liquidity, liquidations, and mitigations of areas. Now, here's my question for you. If we see an accumulation happening, right? We see an accumulation happening, and we know that accumulation goes from, as I told you before, from a downtrend. And when you see accumulation, you can expect a potential reversal to an uptrend. What do you think distribution is? The exact opposite, right? So we're going from an uptrend, manipulation, quote unquote, to a downtrend, a reversal. So from an uptrend to a downtrend. And let's take a look at that. What do we see if we scoot over here? We're buying up, and then we're going down. as you can see right here, right? So again, accumulation, distribution, liquidation, mitigation, and they are opposites of each other. So let's take a look at distribution really quickly. Distribution, again, just as accumulation has two phases, schematic number 1 and schematic number 2, distribution has two phases as well. And in this case, the one I'm going to show you, we don't have the UTAD, which is just an extra liquidation of a high to continue down. That's the only difference. That is the only difference. So what do we see here? What do we see? We see a preliminary supply, or you can say preliminary support, whatever you want to call it. Preliminary support. We see a little push down. They're expecting the market to continue down. They get taken out with this buying climax right here. They get taken out with this buying climax. And what do we see after the buying climax happened? We see an automatic rally, which is just a push down to get more sellers into the market. Those that are candlestick traders, they see these 3 down candles. They're like, oh, it's selling. It's selling. Nope. In this case, they get liquidated out of the markets, right? So we have this automatic rally, and then we have this secondary test, or you can say a mitigation of the buying climax. So we have this buying climax, automatic rally, a mitigation of the buying climax, which is the secondary test right here. And then what do we have? We have a small push down, push up to liquidate any people who kept their stop losses up here. Anyone who had their stop losses up here, they were liquidated out of the markets, right? With this UT, or you can call it an upthrust, UT for short. Upthrust, phase B. Again, not worried about the phases, just worried about these the entities by themselves. We have the upthrust. And what happens after the upthrust? After the upthrust, we see what? A break of structure to the downside. We see that the previous low gets broken. The last lower high, or higher low, the last higher low gets broken. So we can expect a potential reversal after this upthrust. Potentially. Again, as I told you, the UTAD might happen, which is just a liquidation of the upthrust. But after the structure gets broken, we can start looking for confirmations to continue to the downside. So after this upthrust breaks structure to the downside, we see what? Liquidity. Once again, liquidity, liquidity, liquidity. You guys are going to hear this come out my mouth another 30 times before the video ends. Liquidity, right? We've got these trend line buyers buying the markets, right? And at the same time that it's mitigating the upthrust, they get liquidated out of their positions. You see those people that kept their stop losses right here? We're expecting the market to continue up. What happens? This is the wrong one. Long position. What happens? They get stopped out of the market, right? They get stopped out with this push down. So let's take a look at the picture again. So we have this upthrust, and then this last point of supply, which I have marked up right here. Last point of supply. Let me delete this. I'm going to keep this right here just to show you liquidity. All right. Last point of supply. But again, last point of supply is nothing but what? The mitigation of the upthrust. Mitigation of this OB/supply zone. Tapped perfectly into it and continued to the downside. And then the last part of it is this sign of weakness. That just shows that the market really wants to continue down, potentially wants to continue down, right? So the sign of weakness is what breaks even more structure. See, we have the structure low over here. structure low right here. It breaks that structure and does what? Mitigates. Breaks and mitigates. Breaks and mitigates to continue to the downside, as you can see right here. Beautiful. Beautiful. I'm going to pick this. Beautiful. Right? So I hope this makes sense for you guys, and I hope I didn't lose any of you. If I did, feel free to ask me questions in the description below. And I want to mention one more thing. I want to mention one more thing before I close this out. Let me actually do this. And this is actually a neat trick that I found online, and it amazed me how accurate this was. So let's take a look at accumulation again. Just one more time. Accumulation again. We see accumulation, right? We see this accumulation here, which is a sell to reverse to a buy, right? And then we have distribution, which is just the opposite, a buy to reverse to a sell. What if I did something like this? The only difference is what? The direction, right? Now what if I did this? What if I reversed my chart, inverted my chart? It's exactly the same thing. So it goes from an accumulation to a distribution. That's a neat trick that I found. So if I'm confused as to whether it's, or if I'm confused as to whether it's accumulating or distributing, all I have to do is invert my chart. And I can see that it's one or the other, right? The only difference between the two is the direction. So an accumulation goes from down to up, distribution goes from up to down. And all I have to do is change the name. That's why you shouldn't be too concerned in the names of these things. PS, SC, AR, ST. Don't be too concerned about labeling them appropriately to the T, right? You can just say, oh, liquidation of a high, mitigation of this high. You can potentially get in here, catch this sell right here, right? Or liquidation of this high, it comes down, mitigates again, right? You can catch this sell. This sell never comes back up to liquidate you. All we do is mitigate and continue down, right? Or if I invert the chart, exact same thing, right? Just a different direction. All I'm doing, liquidation, mitigation right here. We have a liquidation of the preliminary support, mitigation of the selling climax, a buy up. You could potentially call that buy. Liquidation of the selling climax, a buy up. And what happens? It mitigates this area right here. Mitigates this area right here and continues to the upside. So I hope that made sense for you guys. If you liked the video, be sure to hit the like button. It took me a lot of research and a lot of time to prepare this, and I hope you guys liked it. If you want to stay tuned for more content, be sure to subscribe and, see you in the next video. I've got a lot more bangers coming for you guys. I've got a lot more topics that I've written down, and hopefully this made sense for you guys. If it didn't, let me know. I'll explain it more if you want, and I hope you guys stay tuned for what I have to come, what I have prepared for you guys. Trust me, I've got a lot more prepared, and I hope you guys stick with it. Stick with me on this journey of becoming a profitable trader, of continuing my profitability as a trader. And I hope you guys are able to stick with it, and don't give up, guys. We can do it. Let's get it. Be sure to stay safe. Peace out.